Have you ever wondered how the stock market came into existence? The tale begins in the 16th century in Europe, where trading hubs like Antwerp, Amsterdam, and London were bustling with economic activity. Initially, these markets were commodities bazaars where goods such as spices, textiles, and precious metals changed hands. But as the age of exploration dawned, a new kind of trading began to emerge. Joint stock companies were formed, pooling investment capital from numerous individuals to fund ventures like colonial exploration and trade. These entities issued certificates of ownership, or stocks, which could be bought and sold. This marked the birth of what we know today as the stock market. From humble beginnings in crowded marketplaces, trading in stocks grew in complexity and sophistication. The simple act of buying and selling commodities evolved into a system that facilitated the exchange of ownership in companies, paving the way for the modern era of trading. Thus, the foundation of the stock market was laid, setting the stage for modern trading systems. From the humble beginnings, the stock market began to evolve and expand. This growth was spearheaded by the Dutch East India Company, which established the world's first formal stock market in Amsterdam in 1602. This pioneering move set the stage for a new economic era where trading was no longer limited to commodities but expanded to include shares of joint stock companies. Following closely on the heels of Amsterdam, the London Stock Exchange emerged in the early 17th century, further solidifying the significance of stock trading in the global economic landscape. This period witnessed a significant transformation in the structure of stock trading. Brokers started playing a pivotal role in facilitating transactions, while exchanges provided physical locations for trading. As these developments unfolded, the stock market began to assume a more organized and structured form. This period marked the onset of a new era of stock trading, characterized by structure and organization. As the world entered the era of industrialization, the stock market too underwent significant transformations. Industrialization, with its promise of progress and prosperity, led to the expansion of stock markets on a scale previously unseen. The 19th century saw a proliferation of corporations, with the stock market serving as a vital source of capital for industrial expansion, particularly in the United States and Europe. Fast forward to the 20th century when the stock market witnessed monumental developments. This era brought the creation of stock market indices like the Dow Jones Industrial Average and the Standard & Poor's 500, providing benchmarks to measure market performance. But the story of the stock market doesn't end there. As we stepped into the 21st century, the stock market became a truly global entity. The advent of electronic trading platforms revolutionized investing, making it possible to buy and sell stocks with just a few clicks. Thus, the stock market adapted and evolved in response to global changes and advancements in technology. The stock market, much like the world economy, has weathered numerous storms. One of the most notable storms was the Black Monday crash of 1987. A day that saw the largest one-day percentage drop in history. Then, as we ushered in the new millennium, the dot-com bubble burst, causing a massive sell-off of overvalued tech stocks. And who can forget the global financial crisis of 2008, a seismic event that shook the very foundations of the world economy? But with each crash came recovery, a testament to the resilience of markets and the relentless march of capitalism. Today, the stock market is experiencing a new wave of change. Algorithmic trading, powered by complex mathematical models, is becoming the norm. High-frequency trading, once the preserve of hedge funds and investment banks, is now more accessible than ever. Despite its highs and lows, the stock market continues to be a dynamic reflection of the global economy, constantly adapting to changing circumstances and technologies.